In the last few months, I've passed a countless number of funded challenges. Now, this was a process that used to take me a very, very long time to complete. I put so much importance on funded accounts and funded challenges, and I feel like the pressure of how big I made it in my head made it a pretty substantial task for me. Now, I'd been funded multiple 100Ks or over a few 100K in the past, and that was okay. But recently, I've been passing these challenges like clockwork. I mean, this week I passed two 100K phase ones. Last week I passed another 100K. The week before that, I believe I passed another 100K phase one and phase two. And then the whole month before that, I think I passed four 100K phase one and phase twos. So as you could see, this strategy is clearly working. Now, one thing to note is along the way, I have also failed a few accounts, and this is something that I've documented within the mentorship and in the journey, in the scaling plan and risk management strategy that I showed the mentorship. I do all my trading live in the Discord. I show my weekly plan, my daily plan, but this is a little bit of an insight so that you could see how I pass these challenges pretty fast and all the planning that goes behind this. So here is a blueprint, and this is the blueprint that I actually used in order to scale and pass all these challenges within the last few months. So as you could see, there's quite a lot of factors here to go over now. This is basically where we're trying to get to. So passing challenges with ease. We do not want to be the person that is taking 6 months to pass a challenge. And that is the person that I used to be. I used to consider prop firm trading as basically like I'm trading a live account. But we have to understand that trading a live account, like a personal account, is completely different to trading funded accounts. Our goal here is to try to get to the live stage as fast as possible. Why? Because we are trying to make a payout. So I always give this analogy to my students, right? Would you rather pass one account after 6 months or pass two accounts and fail one account within 2 months? And everyone would pick the second option. Yes, you had to maybe blow a challenge along the way, but now you have two live accounts where you can actually start making payouts. So it comes to that risk factor and actually understanding this opportunity. It doesn't define you. If you lose a challenge, it does not mean you're a bad trader. And I used to convince myself that if I'd even got into drawdown 2-3% on a funded account, that I was a bad trader. Now I understand, and the way I've been doing this in the last so long is that I understand that the challenge stage, it's there to make you fail. It's there to make you blow up as a trader. So you need to understand that and get around that in some sort of way. So our whole mindset actually needs to change. We are not here to try and pass a challenge after 6 months and show the prop firm how good we are of a demo trader. You make that 13% from phase one and phase two and you've made no money. Okay? So would you not rather make that 13% on a live account? So it's not about taking more trades to get to the 13%. It's how do I change my weekly goal? Let's say my average great week is 4%. How do I make that 4% into 8%? And that always comes down to the risk factor. So if you want to pass challenges with ease, you need to actually understand that it's not a bad thing to lose challenges, okay? These challenges are not a reflection of how good of a trader you actually are. Trading on the live stage is a reflection of how good of a trader you are. So, the problem is traders get bored after 2-3 months of trading on a funded challenge where they've made no money. That after that 2-3 months, they start then making those silly decisions. And you know what? I don't blame them. And that's because you've made no money and it's still not live. So you need to try to get to the live stage faster. And I know a lot of beginner traders will be like, but if you know what you're doing, there's no reason that you should not be passing these challenges fast, okay? So I would say the first thing is when it comes to this is experience, okay? Have you already passed a challenge before? If you have, and you're in that stage of your career where you're trying to scale, then you have to understand that you actually know how to pass a challenge normally. Let's get to scaling. Let's get to the next step and where we're passing these challenges as fast as possible. So when it comes to risk, we're risking 2 to 3% per trade. Our daily drawdown is 5% and our max drawdown's 10%, some firms 8%, okay? But that gives us at least 3+ chances on the account, right? If we're 2%, we've got 5 chances. If we're 3%, we've got 3+ chances. That's also considering that maybe we lost the first trade, we're down 3%. We risked 3% again on the second trade, but now we're up 3%. So obviously that means we've got more than 3 chances, because even if we lose one trade, we could still win the next trade and still be in profit. And this also comes back to a strategy that I posted in the mentorship within the scaling program, which is called account diversification. But this is really the general principle that if someone was thinking about buying a 200K and that is all the savings that they had in their bank account, why not buy 450Ks instead and risk 2 to 3%? Okay, you might blow 2 of those 50Ks in the process, but you're going to at least get 100K live. Your probabilities of getting one of them to the funded stage is 4 times higher than if you had one 200K. The problem is most people want to get to that 200K stage straight away. Okay, but you've only got one chance. So are you not better buying 450Ks instead? Even if you pass one 50K and below 3, you have one live funding. Now, let's just do the math. The average price with a discount of a 50K account is around $250. So if we bought 4 of them, we're spending about $1,000 altogether. If we bought one 200K, we're also spending around $1,000, okay? So as you can see, the math is exactly the same. But if I blow the 200K, I've blown my only and one shot. But if I pass one of the 50Ks, but I actually risk higher, 2 to 3%, I might actually get one of these to the live stage within 2 to 3 weeks. If I make a 2% payout now, I've already made $1,000 back. Can you see where this is going? This is the point, and this is why we diversify our risk when we are taking these prop firm challenges. So people keep asking me, why have I passed so many 100K challenges, 100Ks? Because usually when I'm buying 100Ks, I can buy 3, 4, 5 in one go, right? That's the point. And 200Ks, that's completely fine. But I can buy loads of 100K challenges and I can put proper risk on them, and I don't mind blowing one because I can afford it, right? So you have to find out what that is for you, and potentially you buy 50Ks. Now, I've got so much funding now that I probably will still do this account diversification thing on 200Ks going forward, to be honest, because it's getting a bit boring passing all these challenges. Like, I'm not trying to say that in an arrogant way, but for example, this week I've passed 2 100K phase 1s, but now I need to do another 2 100K phase 2s. So I guess there is a point where it comes where you've just got so many that you actually want to take less challenges and less stages. But it comes back to me with the live stage when I've got loads of different live accounts where I can also do risk diversification or account diversification, where I'm taking my live trades on each different live account, which means really if I'm down 2% on one live and I win on a different live, I'm straight to the payout stage. So all of these things, it comes back to having a solid business plan, business strategy. A lot of people come into the prop firm game and they think that, you know, I'm just going to pass a prop firm challenge. But no, you need not only the technical strategy, you need a business plan. How much risk am I going to go in? Am I doing account diversification, etc.? There's a lot of things that will go into becoming that high level funded trader. And, you know, it does come with that experience. So I would say if you haven't passed a challenge normally, then this might be quite a step forward for you. But if you have, then it's probably quite a good idea to start doing the scaling plan. And remember, do what you can afford. Don't buy 4 200Ks. You can easily buy 2 50Ks. Even buying 2 50Ks is better than you buying one 100K, right? Because you've got 2 chances to pass and you can double your risk. So that means if I risk 3% on a 50K, but I've got 2 of them, it's actually the same as if I risk 1.5% on one 100K. It's the exact same math. The only difference is I'm going to pass the 50k ones a lot faster because I've got a lot higher risk on the table and you've got 2 chances. But that's just one example. Obviously, you can put the figures in yourself of how much you want to do, how much accounts you can afford, etc. But these will get you to the live stage so much faster. Now, the next point is passing challenges. Obviously, we need a technical strategy. Mine is obviously just what I use every single day and what I teach in my academy. So it's just doing a weekly outlook every Sunday. Are we trading the swing model? And when we've got a high conviction of high of the week or low of the week, that's when we enter. And the same with the daily outlook. We do that every single day of the week, but we don't trade Mondays. And if it's an intraday model trade, which is something that my students will understand, we will trade, when we see high of the day or low of the day. So obviously that was a mistake. So high of the day or low of the day. So the simple way of saying this is that obviously if I'm on a daily outlook and my bias is shorts and I've decided the intraday model is here, am I looking for high of the day? So if I'm trying to short, I want to see a clear high of the day made. If I see a clear high of the day made, I can short, okay? And it's exactly the same with the weekly outlook model or the swing model. So we're looking for, we're doing our weekly bias. Obviously, are we looking for shorts or longs? If we're looking for longs, for example, we want to see a clear low of the weekend and then we enter with the swing model. Okay, so the strategy obviously with this that we're talking about is passing faster, but you're going to have to lose along the way. And that's what I talked about. You are going to lose along the way, but it does not mean you're a bad trader. Would you want to be the guy that, takes 7 months to pass a funded challenge, or he's break even after 7 months? I always tell this to my students. Being break even for 7 months is not good. A lot of people have been sold a dream that, being break even is good because at least you're not losing. No, you're not making anything either. So don't glamorize being break even. Being break even is not an achievement. Being break even for a month might be an achievement if it was a bad month for your strat and you still remained break even. But being break even for 6 months, staying on that funded challenge, that is not an achievement. You need to try and pass these challenges. So don't let the risk or let the fear of failure stop you from winning. You're too scared to pass a funded challenge. You're too scared to put the risk on the table. So understand that you are going to lose along the way. That doesn't take anything away from you. I would rather, and you would rather, blow 2 challenges and pass 2 challenges within 2 months than pass 1 challenge in a year. Okay? Even if you blew those 2 challenges, but you passed 2, at least the 2 that are live you could start making money from. That's the point of being a trader. The point of being a trader is not for the arrogance and the ego that I've passed every single challenge. This challenge, it took me 12 months to pass, but at least I passed it. You're wasting your time. We don't know how long prop firms are going to stay. Just lose a challenge if you lose a challenge, and don't delude yourself into thinking it's wrong or it's a bad thing. That's what I did in the past, but you actually need to start getting these to the live stage. And if that means you have to blow 1 along the way, then it's better, because once you're at the live stage, now you're going to trade normally and risk normally. It's really easy to make. I always say this as well. How many times have you went up 1, 2, 3% on your funded on your funded challenge on your phase 1 or phase 2 and then went back to break even? People don't realize that if you went that same 1, 2, 3% up, but you're on the live stage, you can actually make a payout. So it's completely different. You're not trying to make 8% anymore. You're not trying to make 5% anymore. You don't have all these things in the way anymore. So once you do get to the live stage, it's part of your collection now, and you just trade it normally. But to get there, risk a little bit more, and maybe blow 1 challenge to pass 3, and that's okay. That's actually completely okay. Okay. Now, the psychology problems that come with this is getting used to losing. A lot of people are not used to losing. When you're risking 3% on a trade, some people are scared of being down 3% ever. And I used to be that guy as well. So once I started risking a lot more, I had to be comfortable with, if I lose 1 trade, I'm already down 3%. So as I was saying, we need to get used to losing and being in heavy drawdown. If we are trying to be a little bit more aggressive with our risk and pass these challenges faster, of course, we are going to be in the position where we sometimes go down 3 or 6%. And I showed the mentorship an example of me using this scaling model, going down 6%, keeping the same risk and actually passing. Whereas you know, in the past, I would go down 2% and I would already think that the challenge has been blown. And that is just, you know, bad psychology and not being able to accept a loss. So these are all the factors really that we need to consider, and there are many more, but for the sake of this video, this will give you that solid plan and solid blueprint to be able to pass these challenges faster. And you cannot do this if you don't already have a technical plan. So I'll show you my technical plan and what I really did, what trades that I took. But really it starts from the start of the week. So if we go into the Discord, as you could see, I do a weekly outlook every single week where I'm showing where I expect price to go. And in my weekly outlook, as you're going to be seeing, weekly outlook. So my plan, as you could see on the Euro USD chart, was to wait for this low to get taken. And then on the 4-hour chart, have a clear sweep of this low where I expect low of the week to be created, and then take longs towards this buy side target, as you could see, just like I've drawn over here. Now, if we look at the chart and see what actually happened with the euro, if we look at the 4-hour, you can see that that was exactly what happened. So we swept this low and then we made a clear high, and then I traded towards the targets over here. So if you compare these two charts, this is what actually happened. And here was my plan. As you could see, we just go back to that screenshot. It's exactly what I wanted. So I'm looking for the sweep of the low and then trade towards the highs. 4-hour on DXY, if we look at the current chart, you could see that's actually exactly what happened. So I got in line with the bias that I already wanted. And as you could see, that was recorded on the 22nd of September. And when did that move actually take place? You could see 25th of September and 24th of September. So that was planned 3 days before this actually happened. So that goes back to the technical. So we're looking at the weekly outlook, and then do we trade the intraday model or the swing model based off the buys? So I actually did both. After I had that low sweep that I was wanting, as you could see over here, and I was looking for higher targets on the DXY, as you could see from that video also. Then I had seen this is a clear low of the week placed in, and we've seen this bullish candle. So I entered with my swing model. Everything technically fit the plan. So I've entered over here, around here, when I've actually it was around here when I seen that price was actually bullish. And I market entered, and I just had a 30 pip SL like this, okay? And with this position, I had targeted these highs over here. Now, what happened the next day? As you could see, I went into a bit of drawdown, and then price went higher. So I'd risked 3% on this position on one of my accounts, and then the next day, when I'd seen this displacement, as you could see, actually higher to my area, I then moved my stop loss over here. So I've actually just more than halved my stop loss. So instead of risking 3%, I believe I was risking about 1.5 now that I've changed my risk. And then we managed to get the intraday model. So as you could see, we've done their daily outlook. Our daily plan is bullish, and I was expecting low of the day to be in. So I then entered and scaled into another position over here and entered another buy position. As you knew, the first one we managed the risk, so I've entered again over here, and I believe my stop loss was around here, right? And I've targeted the full high. As you can see, I believe I was like 3.3R, so maybe stop loss was here. It must have been there, right? And yeah, as you could see, both of these positions went on to hit the full take profit. Technically, this is just the best way of doing things when we're looking at our higher time frame analysis. Don't get lost in lower time frame, especially if you want to take high risk trades. It's always better to look at your higher time frame and then just off of high and low of the week. So we wanted low of the week since we're looking for longs, and then we were able to position ourselves, manage risk over here. So then our risk, instead of 3% on this trade, was actually 1.5, and we were able to get another trade towards the draw. So this actually passed 2 of my accounts, and it's a pretty simple, fairly simple trade. And as you can see, On that same day, I did my daily outlook, and I'm going to just show you that as well. So daily market outlooks, and you're going to see that I had sent this as my daily outlook, self-explanatory, already called the setup from Sunday if you watch the outlook, but here's a little update. So I'm showing the DXY 1 hour chart that I expect price to trade into this hourly fair value gap and drop, and then as you can see, this is what I sent before, and then this is what happened afterwards, and then this is where I've showed my live execution of me getting in, and then I showed my other position, my other funded account of me having both entries, and then you could see that before and after. So looking for that drop on DXY, and then DXY making that big bearish drop. So that's really what I was looking for to execute this trade, and everything really happened. And if we just look at that DXY array I was looking at, this is the one that I sent the Medship, just looking at for the daily plan for price to trade into here and trade lower. And as you know, when DXY drops, then Euro USD trades higher because they're inversely correlated. So if we just get rid of this exact area that I had longed Euro USD from was the same hourly fair value gap that I shorted DXY from. Obviously, I don't execute on DXY, I just use it as the main pair that I'm actually analyzing. So DXY traded into here and traded lower, and then Euro traded into here and traded higher. So that's really how I executed this trade. But always it comes actually down to the way that you see the challenge. This is going to help you. In order to pass challenges, you need to change your whole mentality and actually go in with a business plan. So if this video was helpful, I hope that you took something from this video. I feel like for me, the biggest thing that had to change was the plan going about funded accounts and understanding that it's not a bad thing to lose accounts. You want to get to the payout stage, okay? And let me just show some proof of this as well before people doubt it. Here's my channel, and as you could see, my member passed on the same day, one of my students doing the exact same trades. Here is my profit. As you can see, I passed this phase one over here, hit the profit target, and then here are my other two positions on another prop firm, as you could see. And then this is another one of my students that passed. And then this was the other phase one that passed. As you can see, 7% hit. So this one was a 7% profit target. That is with AscendX, which is now called QuantTeckle. So if you want to try QuantTeckle out, you can use code BANI for 50% off. It is actually a very, very good prop firm. And I've been using them. They've been reliable. They've been paying me out. So if you want to try it out, you can use that link as well. And as you can see, I passed. And that's the proof over there. So as a whole, your mindset needs to change when you're trying to scale in your trading journey. If you want to get these big payouts and you want to get loads of live accounts, you need to have a little bit more of risk on the table, and don't be so scared of failing, because that is going to be the reason that you can't even pass.